We are covering these 9 top actively traded stocks that are bullish today. Our review on BTG. B2Gold Corporation is a global gold producer with mines running in Mali, Namibia, and the Philippines, and they've got some pretty serious expansion plans underway, especially in northern Canada with their Goose project. They're not just sitting on what they've got, they're exploring new opportunities across Colombia, Finland, and more parts of Canada, trying to build out a strong long-term pipeline. Now, today's action? Shares were up a solid 5.5%, but what really raised eyebrows was the volume, over 54 million shares traded. That's not normal day-to-day flow for B2Gold. This kind of volume doesn't usually come out of nowhere unless someone big is stepping in or rotating into the stock. There wasn't any fresh news headline pushing it, no press release, no major update, but gold as a sector has been heating up lately. With all the noise in the markets, rate cuts, inflation, geopolitical stuff, gold tends to be that safe-ish space where people start parking cash again. And B2Gold, with its global footprint and a few big projects ramping up, starts looking like a pretty reasonable place to be. So this move feels more like a sentiment and positioning shift than a reaction to anything specific. Could be institutions loading up, or maybe momentum traders jumping in after that 45M plus volume spike got noticed. Either way, B2Gold just made itself one to watch more closely over the next few sessions. A review on IAG. IAMGOLD Corporation is a mid-tier gold miner based out of Canada, with active projects spread across North America and West Africa. They've got a mix of producing mines, like Essakane in Burkina Faso and Westwood in Quebec, as well as some big developments like Côté Gold in Ontario, which is one of the more closely watched projects in their portfolio. They're also exploring some earlier stage properties across Quebec, so they're not just mining gold, they're planning for a long runway. Now, the stock had a pretty solid day, up nearly 5.7% with 34 million shares traded, which is well above average. And this move wasn't just about IAMGOLD specifically. Gold itself has been breaking out to new record highs, and that's got the entire mining sector rallying. We're seeing a rotation into miners as macro uncertainty builds, especially with tariff talk heating up again and investors looking for safety plays. IAMGOLD's next earnings are set for May 6th, and while today's run is likely more tied to sector momentum, the upcoming report could be a key catalyst. The company's been working through some cost challenges at Côté, but analysts still like the longer-term setup, especially with production growth and valuation looking pretty attractive compared to peers. So between gold's momentum, earnings right around the corner, and a project pipeline that's starting to take shape, IAMGOLD is getting some attention, and for now, the stock seems to be riding that wave just fine. Our review on KGC. Kinross Gold Corporation is a Canadian-based senior gold miner with a pretty global footprint. They've got operations across the US, Brazil, Mauritania, Chile, and Canada, tapping into everything from active mines like Fort Knox in Alaska and Tagist in Mauritania to development projects like Great Bear in Ontario. So, yeah, they're not a small player, and they've got a well-diversified base in terms of both geography and mine stages. Now, today's action in the stock was strong, up over 5% with 24 million shares traded. But this move is really part of something bigger going on across the whole gold sector. Gold prices shot past $3,200 an ounce, another all-time high, as trade tensions flared up again. With Trump's new 125% tariff on Chinese imports layered on top of existing duties, the total tariff hit is now at 145%. Investors are looking for safety, and gold is the go-to move in times like these. For Kinross specifically, they're one of the standouts, up nearly 39% year-to-date, which is even stronger than some of the bigger names like Newmont and Barrick. That's partly because Kinross is a bit more leveraged to gold prices, so when gold pops, this name tends to move more. You've also got supportive fundamentals here. Central banks are still stacking gold. Gold ETFs saw big inflows in March. And with Fed rate cuts possibly on deck starting in June, the macro setup looks like it could keep pushing gold even higher. Some analysts are calling for $3,350 gold by 2026, and if that plays out, Kinross is going to keep getting love from investors who want that extra torque. So, in short, Kinross is riding the wave of a bigger gold rally, but it's doing it with real strength. It's a name worth keeping on the radar while this momentum continues. Our review on NEM. Newmont Corporation is one of the big dogs in the gold mining world. They've got a global spread, operations and assets across North and South America, Australia, Africa, and even Papua New Guinea and Fiji. It's a deep portfolio that gives them a strong foothold in the global gold supply chain. Today, Newmont stock was up 4.49% with 23 million shares traded, which isn't just a random pop, it's part of this broader gold rally that's been lighting up the sector. Gold just broke above $3,200 an ounce, and that's a record. So what's fueling the fire? Well, it's a mix of macro pressures, a weaker US dollar, fears of another US-China trade war, and geopolitical tensions that are pushing investors back into safe haven assets. And gold? Gold is the classic safe haven. There's also this shift in expectations around the federal March inflation data came in softer than expected, which has the market leaning toward a possible rate cut as soon as May or June. Lower rates tend to boost gold prices since gold doesn't yield interest, so the lower the rates, the more attractive gold becomes. On top of that, we're seeing a surge in gold ETF inflows and steady buying from central banks, which keeps adding fuel to the rally. Now, for a heavyweight like Newmont, this kind of environment is basically a sweet spot. They've got scale, they've got diversity, and when gold runs, they benefit in a big way. Year to date, the whole sector's been flying, and Newmont's right in the thick of it. Analysts are even starting to throw out $3,500 as the next possible gold target, though, of course, it'll be a bumpy ride getting there. But big picture? Newmont's move today is more than just a blip. It's a reflection of real momentum building behind gold, and the company's perfectly positioned to ride that wave. Our review on FSM. Fortuna Mining Corporation, formerly known as Fortuna Silver Mines, is a Canadian precious metals company with a pretty solid global footprint. They operate gold and silver mines across Latin America and West Africa, including countries like Argentina, Burkina Faso, Côte d'Ivoire, Mexico, and Peru. Their main assets include the Seguela and Yaramoko gold mines, Lindero in Argentina, and the San Jose and Caloma mines for silver and base metals. The stock jumped 8.35% today with 19 million shares traded, and it wasn't just following the broader gold rally. Fortuna actually had some strong news of its own. They just reported Q1 production numbers, turning out 103,459 gold equivalent ounces, with almost 92,000 of that in gold. That's pretty solid performance, even if it's a slight step down from previous quarters. More importantly, they completed the Lindero leach pad expansion right on schedule and within budget, which adds about 10 years of production capacity. That kind of runway is huge for long-term stability. Management also repurchased nearly 1 million shares, which usually signals confidence in the company's value and future performance. Despite some operational cost challenges in certain areas, Fortuna reaffirmed their full-year guidance, showing they're not spooked by the short-term noise. With gold sitting at record highs and investors looking for safer plays amid geopolitical and economic uncertainty, Fortuna is starting to look like one of the stronger mid-cap names in the space. The mix of operational follow-through and favorable macro tailwinds is giving the stock a nice boost, and potentially some staying power. Our review on NEOG. Neogen Corporation is a company you don't hear about every day, but they play a pretty critical role behind the scenes in food and animal safety. They've got two main arms to the business. one that helps food producers and processors detect harmful stuff like pathogens and allergens in food, and another focused on animal health with everything from vaccines to genomics testing. So yeah, not flashy, but super important. Now, their stock just popped 12% today with 14 million shares traded, and that's a big move, especially considering things were looking a little rough just a few days ago. Neogen had a mixed Q3. Revenues dropped 3.4% year-over-year, and both the food safety and animal safety segments hit some bumps. But dig a little deeper and there's some resilience in there. The food safety side actually grew 7% on a core basis, once you strip out the sample collection noise. What's really interesting, though, is what's been happening on the leadership and insider activity front. Their CEO, John Adent, announced he's stepping down, which naturally added some uncertainty. And analysts didn't waste time cutting price targets, pointing to the macro headwinds, soft earnings, and the leadership transition as reasons to stay cautious. But then, bam, their chief administrative officer, John Patrick Moylan, stepped in and bought 10,000 shares. That's not just a token buy. It sends a message. Someone on the inside still believes there's value here. Insider buying like this, especially when the stock's been under pressure, often boosts investor confidence. Combine that with a refinancing move to shore up the balance sheet, and suddenly you've got a bit of a turnaround story forming. So while Neogen's not out of the woods yet, this rally suggests the market is paying close attention, and maybe even warming up to the idea that this dip could have been overdone. Investors looking for a bounce-back play in the life sciences and diagnostics space might want to keep it on their radar. A review on HMY. Harmony Gold Mining Company Limited is a major player in the gold mining world, with a solid base in South Africa and operations spanning across Papua New Guinea and Australia. Their focus is on extracting and processing gold from both underground and surface operations, and they've got a footprint in some of the world's top gold-producing regions. If you've been following the gold market lately, you might have noticed Harmony's stock taking a nice bump, up 10.55% today, with 13 million shares traded. So, what's fueling this rally? Well, the price of gold is on a tear. It's up a solid 3.4%, sitting at $3,085.50 per ounce, marking its best day since October 2023. The driving force? Safe haven buying. With escalating US-China trade tensions and President Trump's latest tariff moves, gold is benefiting from its status as a safe bet when political and economic uncertainty ramps up. Harmony, along with other gold miners, is riding the wave. Their stock surged a notable 13.8% as investors are flocking to gold stocks as a hedge against the volatility in the broader market. This isn't just about the price of gold today, though. The broader trend of geopolitical tensions and financial uncertainty could keep the momentum going, with investors continuing to turn to gold and gold miners as a place to park money. For Harmony Gold, this means that as long as gold prices stay strong, their operations and stock are likely to benefit. With production coming from rich gold fields in South Africa and promising projects in Papua New Guinea and Australia, the company looks poised to leverage the current environment. While there's always risk in mining stocks, especially with the unpredictable nature of commodity prices, right now, it seems Harmony is a big beneficiary of the gold boom and investors are taking notice. If you've been watching the sector, this is definitely one to keep an eye on. Our review on LI. Li Auto Incorporated is making waves in the electric vehicle market with its innovative range of smart EVs, including the Li L9, L8, L7, and its latest addition, the Li Mega. The company is gearing up for a major launch at the Shanghai Auto Show, where it will unveil an updated version of the Li Mega MPV on April 23rd. This launch will feature two variants, the Li Mega Ultra, which has been available for pre-sale, and a new home variant, expected to be priced lower. Both variants are set to begin deliveries in May, which adds another layer of excitement for investors and potential buyers alike. One of the most notable updates with the LiMega is the enhancement of its smart driving capabilities. The vehicle will now include a new Thor-U chip, marking a significant upgrade from the previous NVIDIA Orin X chips. This upgrade will allow the LiMega to support Li Auto's next-generation autonomous driving architecture, MineVLA, which is a big step forward for the company in terms of self-driving technology. These tech improvements will also extend to Li Auto's other popular SUV models, like the Li L9 and Li L7, when they receive updates in May. As for the stock performance, Li Auto's shares are riding high today, up 5.25% with 10 million shares traded. This surge follows the news of the upcoming LiMega update and the growing anticipation around the expanded features. With deliveries of the updated models coming soon, it looks like Li Auto is positioning itself well for continued growth in the competitive EV market. It's clear that the company is focused on innovation, with its new tech-driven models and features setting it apart from the competition. Investors should keep an eye on Li Auto as it continues to roll out these exciting advancements. Our review on SMMT. Summit Therapeutics Inc., a biopharma company working on innovative therapies like ivonescimab for non-small cell lung cancer, NSCLC, has been making headlines. Ivonescimab, a promising bispecific antibody, is currently in phase 3 trials and aims to combine immunotherapy with anti-angiogenesis effects, potentially changing the game for NSCLC treatment. The big news this week comes from the company's co-CEOs, Robert Duggan and Maky Zanganeh, who each made a substantial move by purchasing nearly 4 million shares of Summit, worth over $6 million. Insider purchases like this often signal strong confidence in a company's future prospects, and today, that confidence was reflected in the stock, which surged more than 14%. But it's not just insider moves that are turning heads. Analysts are also bullish on Summit's future. Citi recently upgraded the stock to a buy, citing strong potential in the upcoming HARMONY-2 trial, which is seen as pivotal for ivonescimab's future. Cantor Fitzgerald and Evercore ISI are backing the stock too, with positive ratings that highlight the undervaluation of Summit's shares and the potential for ivonescimab to outpace current cancer therapies like Keytruda. On top of that, Truist is expecting the HARMONY-2 study to surpass expectations, raising its price target to $35, confident that the upcoming data could trigger significant gains. With leadership putting their money where their mouth is and analysts seeing big upside, Summit Therapeutics is definitely one to watch as they continue to push ivonescimab through its trials, potentially setting the stage for a breakthrough in cancer treatment. Please subscribe, give the video a like and watch more from our playlist. Thanks.